the meeting. I think it is in order for us to start. Right. Good morning to you all once again. I hope you can hear me loud and clear.
Yes, loud and clear.
Yes, we can hear you. Thank you.
Thank you very much.
We can hear you.
Right, thank you. We are excited to welcome you all to this webinar about the IFR for NPO project and how it is relevant for stakeholders in Zimbabwe. Let me introduce myself. My name is Tafazwa Murimba. I currently work at Save the Children International Zimbabwe Country Office as the head of finance. I'm a Deloitte-trained chartered accountant, and I've been in this sector since 2014. I have worked with several organizations in this sector in and outside Zimbabwe, supporting financial risk and grant management functions. These organizations I have worked with include the Legal Resources Foundation, Young Africa International, and the SRI-HRA Trust. I must say it has been an exciting and challenging and insightful 8 years. I am glad to be collaborating with the IFR4 NPO as a country champion for Zimbabwe to ensure that stakeholders are aware of the project and to encourage you all to actively participate. And you might be asking why this is so important to have the conversation now. Given the pandemic, the temptation is for us to be in the short-term planning mode. However, our sector, like all other sectors, has seen a shift in how we work and communicate. The discussion around setting global reporting guidelines couldn't have come at any better time than now, where we have now to reimagine our working models within our organization and across all collaborations. And this meeting, we are joined by Samantha Musoke, who is the IFR for NPO Project Director for Human Time. I will say a few words to introduce her later on. Right, just a little bit more about this event. This event is a meeting rather than a training webinar. Although we are online rather than in person, we have built in time for small group discussions and use of the chat function to encourage interaction, discussion, and feedback. We will have 2 hours altogether, as you can see, as per the timetable that was shared previously. There are 2 blocks of short presentations about this project and how to participate, with a small group discussion and feedback in between. So as you can see, this will be highly participatory, and we encourage you to participate actively. As we discuss issues of financial reporting for not-for-profit organizations, we would like to keep in mind that not-for-profit financial reports have little meaning apart from the context of the great work that NPOs do around the world and here in Zimbabwe, in health and social services, education and research, environmental protection, development, aid, advocacy, religion, culture, recreation, and more. Right, just to go through Zoom etiquette, here are just some tips that will help the meeting run smoothly. For most of the meeting, you'll probably find the speaker view more helpful than the gallery view. When we break into smaller groups, the gallery view will be much better. And in general, please keep your microphone off unless you are speaking. Do keep your video off during the presentation, but during the small group discussions, it will be important to turn on your video if you can to enable a more meaningful discussion. Please do feel free to type a comment or question in the chat at any time. This should be directed to the host only, or to everyone as appropriate. When we report back from the small group sessions, it might be helpful to use the raise hand function if you are nominated as a spokesperson for your group. To raise your hand, you click on the participants in the control panel, and from there, you see a button to raise or lower your hand. Right. Before we get started, let's find out who we have with us today. But first of all, I'm glad to welcome and recognize the presence of officials from the Public Accountants and Auditors Board, Institute of Chartered Accountants, SAR, and some esteemed officials, partners at audit firms, etc. Thank you very much for joining us during this very important meeting as we work together to shape the future of financial reporting in the not-for-profit organization. You are all welcome. If we could just introduce ourselves in the chat box, please your name, role, and the organization that you work with. Thank you, Jackie. Gift, thank you very much for the introduction. Brian Tsao, nice to meet you. He's also representing the Institute of Internal Auditors. Thank you for the representation. Alice, partner at Grant Thornton, you're welcome. Thank you very much. Jairos, thank you very much. Welcome to this meeting. Macmillan, two more. Thank you very much for introducing yourselves. Please feel free and continue. It is very important for us to know who is with us during this meeting. Right. As we continue with the introductions, we'll move on with the meeting as we type in the chat. Just to discuss the interest in this initiative, there were more than 420 registrations for this event. And unfortunately, the Zoom license can only handle 300 participants. So we will be recording the event for the benefit of those who had shown an interest, but were unable to join us. At this juncture, if you would allow me to introduce Samantha Musoke, who is the project director for the IFR for NPO, and will be taking us through the following slides. Sam, she prefers to be called Sam, but her full name is Samantha Musoke, is a UK chartered accountant who qualified in Masters in 2000 and specialized in charity audits. In 2001, she moved to Uganda and has held various roles in the not-for-profit sector since. Some of these roles include auditor, CFO, grant management advisor, board member and treasurer, as well as carrying out training and consultancy assignments across Africa. She has been an associate with Humantam since 2004. For those of you who may not know, Humantam used to be known as Inside NGO. She became the regional director of East Africa in 2017 before taking on this role to direct the IFR for NPO project in 2019. She is joining us from Uganda. Samantha, you are welcome. And over to you.
Thank you so much. Thank you, Tafadza, for that lovely introduction and for opening this meeting for us so warmly. And thank you to everyone who is here. I am honestly really amazed by the amount of registrations we've had. This is the second highest of any country around the world. We've been holding these meetings from September through to now in lots of different countries. And I think the record goes to Bangladesh with over something like 700 registrations, but the next highest is India with 174. So Zimbabwe, fantastic level engagement and interest in this topic. So thank you to all of you for engaging and registering. So I'd like to, first of all, we're going to about 20 minutes to give you a bit of an overview of the IFR for NPO project, so you can get a sense of just the basics about what it's about and what it covers. Apologies to any of you who are already a bit familiar with it, but it does feel important to get everybody on the same table, on the same page, so that we can have a really good discussion about it and all coming from the same place. So I'm going to start off by playing you a short video, which is also available from our website. So if, in case you can't hear it or in case it's a problem, Tafadza, maybe you can tell me, but hopefully this will work smoothly. Here we go.
IFR for NPO is a 5-year initiative to develop the first ever internationally applicable financial reporting guidance for non-profit organisations. It's coordinated by Humentum and the Chartered Institute of Public Finance and Accountancy. You probably know that businesses have international financial reporting standards, and governments have international public sector accounting standards. But the not-for-profit sector has no equivalent. This undermines the consistency and usefulness of financial reports, and ultimately harms the sense of trust and accountability that is so central to its effectiveness. The current system is also inefficient, with duplication of effort for both NPO and funders in meeting multiple and at times conflicting financial requirements. An academic study in 2014 received responses from 179 countries. 72% of respondents agreed that an international standard for NPOs would be useful. So, the IFR for NPO project is answering this call. By engaging a wide range of stakeholders, the new guidance will command support from the accounting community and NPOs, as well as those that fund and regulate them. The guidance is being developed in a technically rigorous 3-step process, involving a consultation phase and development of an exposure draft, with final guidance available from early 2025. With the goal that at least 10 countries will use the guidance by 2030, with more to follow. The project has a technical advisory group involving national standard setters from every continent and an official observer from the International Accounting Standards Board. And the practitioner advisory group helps us ensure the guidance will meet users' needs. The founding funders share our vision for this game-changing project. We have the opportunity of a generation. We can increase accountability and transparency while reducing inefficiency in the current system.
Great. So I hope that has just given you a sense of how exciting this project is, how important it is, and a sense of some of the scale and some of the reach that we're getting with this project. One question that I just want to clear up right from the beginning, because people often ask me, is which financial report specifically is this project dealing with? Which financial reports are we developing guidance for? And obviously NPOs produce lots of different reports, so it's really, really important that we're clear which ones we're talking about. So you can see in this diagram, hopefully this looks familiar to you or feels familiar. We have all the transactions of a non-profit organization or NPO. You might use the word NGO in Zimbabwe, but actually it's lots of different types of non-profit organization. It might also be churches or member organizations or whatever. So NGOs, NPOs, all the transactions should get entered into an accounting system, which then classifies them and summarizes them so that you can produce various reports. And some of these reports are for internal use by managers, project managers, senior managers. even the board. But if you get donor funded money or you've got donor funded projects, you might find that you have to produce special purpose reports about that project for that donor. So that's another type of report. And then at the end of every year or every financial period, an NPO would produce its annual audited accounts, which are also known as general purpose financial statements. They are for the entity as a whole and therefore a range of different users. Often regulators may require them. Some people post them on their website. So they're the general purpose financial statements. Now, for this project, we're focusing specifically on these general purpose financial reports, the entity-wide year-end accounts. Now, of course, it's obvious from this diagram that the different types of reports are connected because they all come from the same accounting system, or at least they should. So because of that, because we can't completely divorce the issue of donor project reporting from year-end accounting, Humentum and others are working on other projects and initiatives to also harmonize donor reporting formats. Now that's slightly a story for another day, but there's a protocol called Money Where It Counts, where a number of donors have signed up to have a standard expense classification system and things like that. Now, if there's some more harmonization around donors and there's more harmonization around our year-end accounts, it could make the diversity and the difficulty of our financial reporting world much easier in the long term. But this particular IFR for NPO project is focusing on the year-end accounts. So I kind of thought it'd be good to set the scene in that way, so we all know that we're talking about the same thing. So another key question people ask is which stakeholders are being considered in this project? I know in some countries there was concern that this was about sort of trying to regulate NPOs or trying to spy on them more. It isn't at all about that. There are three key groups of stakeholders who have expressed challenges with respect to financial reporting. And we are responding to the challenges expressed by these three main groups. So the first would be the users or the readers of financial statements. And when we talk about general purpose financial reports, they're supposed to meet the needs of a range of users. So this would include donors, but also other users like regulators, maybe service users, or sometimes they might be known as beneficiaries or clients or members, the general public, maybe banks, maybe you have to produce your audited accounts to open a bank account. Perhaps if you're collaborating with a partner, maybe your suppliers and even your staff might be interested to see your finances. So those are the sort of broad range of users that are relevant as users of general purpose financial reports. Now, within that group, donors are obviously particularly influential, large donors especially, so grantors. So as a project, we've convened a donor reference group. We've got, I think, 5 members so far. The World Bank has just agreed to join. We've got the Bill and Melinda Gates Foundation, Open Society Foundations, Ford Foundation, and the Nippon Foundation from Japan, and others are joining. Now, the purpose of that group is obviously to be able to really hear their views and also to reflect back some of the things we're hearing from grantees. Now, obviously, if the requirements of this guidance that we are producing is completely at odds and conflicts with donor reporting requirements, that just makes things, it causes problems for reporting entities. So we want to make sure we're being as joined up as possible and listening and talking and trying to collaborate and communicate as much as possible. And donors themselves are very behind this project and they're seeing the value of it and the importance of it. So we're very hopeful that in the coming years, we can move towards a situation where there's much more alignment. Now, the second group of users, the second group of stakeholders, I should say, are very important. That's those who prepare the financial statements, i.e. the NPOs, the non-profit organizations themselves. And if we are trying to prepare accounts that are useful for users to read, and they might want lots of different information, and they might want, you know, analysis in different ways. And we need to balance the benefits to the users with the cost to preparers, because if it's going to be complicated or burdensome, that's a problem for preparers. So we want to make sure we're keeping the needs of those different types of stakeholders in balance. We try and get the right level of detail and presentation, that there's a balance of the different needs of those types of stakeholders. Now, the third group of stakeholders is auditors, who provide that assurance about whether the financial statements present a true and fair view. And they're often at the front line of supporting NPOs to implement and apply applicable accounting standards or guidance. So it's really, really important that they're engaged and able to share their opinions and expertise on this project. Each of these stakeholders have expressed challenges. With auditors, for example, in Uganda, we don't have a separate country level guidance for non-profit organizations. So I've seen audit reports in Uganda which say these accounts give a true and fair view, and they don't say in accordance with a particular framework, because, well, IFRS really apply, IPSAS doesn't really apply. Which framework are they going to quote? And so we end up with auditors really having trouble to define true and fair view in the absence of an international applicable framework. Now, as a project, we don't represent any group of stakeholders. Our job is to really develop guidance that balances, understands and hears the views of different stakeholders, and then balances something that benefits everybody. That's the plan. So what are we actually going to deliver? What change do we actually want to bring about with this project? So if we think about the current problems, there we are. Many of the challenges that people have expressed stem from this core problem that there is no internationally applicable standard for how NPOs prepare their annual financial statements. Some countries do have national standards, so probably about 20, UK, US, Canada, Colombia, I think. There are a few, but each of those are different from each other. So where there is national guidance, there's inconsistency there. For countries where there isn't national guidance, it's a bit of a free-for-all, trying to apply standards that are written for different contexts, and everybody coming up with slightly different answers. For large international INGOs, international NPOs, if they're trying to consolidate reports from different countries, that can make that really expensive and problematic. We also hear that when funders look at the financial reports of potential grantees, maybe they're trying to assess financial capability or financial health, or they're trying to understand the wider context of the organization in the context of a grant proposal. Sometimes they find it really hard to kind of access that information in the way that they need it. And that often results in expensive and duplicative due diligence processes. Have any of you been through a due diligence process or 10 at the same time? Often people asking the same questions, trying to get to the same things, but quite burdensome, both for grantees and grantors. Same with financial reporting and auditing. We get a lot of duplication in those processes. So what we get with this lack of guidance causes this lack of clarity and consistency. And that ultimately reduces the transparency, doesn't it, in the sector. That makes funders nervous, especially about things like double funding fraud, where an NPO, not any in the room, but other ones, might put the same cost incurred once, but charge it to 2 different donors. That's double funding fraud. And it's quite hard to spot with this current focus on project-based reporting without very transparent reconciliation to year-end accounts. And that funders are very nervous about that. So all those different current problems that we've explored there. So the solution, we believe, is this the solution that the IFR for NPO project is developing is internationally applicable guidance for how NPOs should prepare their annual general purpose financial reports. Now, it's important to note that much as we can produce guidance, and it could be applicable internationally, it's actually up to any particular jurisdiction to adopt it formally. So in Zimbabwe, one body or other, government or regulator, would need to say, in Zimbabwe, these types of NPOs are permitted or required to apply this guidance. So it would really be at country level to take on adoption. That's just like IFRS. So some countries use IFRS, others don't. It's a country level decision to do that. In some countries where there's very weak regulation of the non-profit sector, I think funders can also play a really big role in endorsing it and recommending it as the best practice for the best way to produce financial statements that give a true and fair view in the absence of other requirements or guidelines that in a specific jurisdiction, I should say. So we don't pretend it's a magic bullet. It's not going to solve all the problems, but it will create a foundation and a framework that a lot of other issues can build on and can help solve. So what do we see as some of the future outcomes of this guidance in place? They're really, really wide ranging. So for NPOs that are applying the guidance, it means they'll be better able to demonstrate their capacity and hopefully attract funds, as well as supporting the provision of decision useful information for governance and management. It means that people can look at these accounts and go, oh, that's interesting. Well, cool, we need to take action here, or let's do this, or let's not do that. Just in the same way that company accounts are useful and meaningful for their prime users, which is investors, we need something that's useful and meaningful in our context and for our main users. For funders, it contributes to better and more efficient due diligence, and that's a win for NPOs as well, of course. And having clear guidance simplifies and improves the value of audit insurance. I can hear the auditors in the room going, yes, please. So one of the other really important outcomes from this project, which is kind of separate from the guidance itself, is the creation of a global community of stakeholders able to engage and collaborate to solve sector-wide issues on this topic. And that's never existed before. And that's part of the reason why there's never been the ability to produce this guidance before. It's interesting, Tafadzwa said at the beginning that now is the right time for this guidance. To be honest, the right time I think was 10 years ago, but the next best time is now. Ultimately, what we believe is that the guidance will contribute to a more resilient and accountable sector that's better able to attract and generate and utilize funds to achieve all this positive social good that these organizations do, which is what Tafadzwa was referring to earlier. Rather than financial reporting getting in the way and being a stumbling block and a challenge, it can support and enable NPOs to do what they do better. So who's behind this project? It's important to know. So it's being implemented by two organizations in partnership, Humentum and CIPFA. So Humentum is a global association that convenes NPO professionals and inspires sector-wide change. As Tafadzwa mentioned, it's actually formed from a merger of Inside NGO, Mango and Lingos. If you had been to training courses from those organizations earlier in your career, those three organizations formed one organization back in 2017. We are ourselves a non-profit organization and very passionate about what we do. I'm really excited about seeing structural change at the sectoral level, which can create an enabling environment for the sector to be able to do what it does better. Then the Chartered Institute of Public Finance and Accountancy, that's UK-based professional accountancy organisation, a member of IFAC, has a standard setting role for local government and charities, and it also plays a really important role as an international convener on public sector accounting issues. So both Humentum and CIPFA, as I said, we're both NPOs ourselves. So we could really say this is a by the sector, for the sector project. So between us as partners, we've connected to a range of stakeholders within the sector that are really critical to this project. So standard setters around the world at national level and international, the accounting and audit community, very strong connected through IFAC and others. And then with Humenton, obviously NPOs themselves, many of whom are our members, some of the bigger ones, and funders. So seed funding to start this project for us to launch back in July 2019 was provided by the Open Society Foundations and the Ford Foundation. The full budget is around the $4 million mark, and I should say it's not fully funded. So there's some work going on to raise those funds as we go along throughout the project. Now, in addition to these project staff teams, if you like, at Humenton and SIPFA, which I should say are very, very small, sort of two, 3 people at each organization, we have advisory groups who offer their perspectives and expertise on a voluntary basis. So they're absolutely essential because this is about building consensus and getting global input. We can't have a couple of people in a couple of offices in 1 or 2 countries making decisions. It really does need this input. So the technical advisory group comprises national accounting standard setters from 5 continents. So these are mostly the countries that have their own national non-profit guidance. Like, for example, you might be familiar with the UK, has the UK Charities SORP. In America, the Financial Accounting Standards Board, the FASB, has guidance for non-profits there. So in case you work for an INGO and you have a headquarters, you might be familiar with some of those guidance. So the UK and the US and others are around this table. So, okay, we're all doing something slightly different, but it would be great for all of us if we could be working towards and converging towards something that has more commonality. Convergence is the buzzword for the entire accountancy profession internationally, no different for our sector. So I should also mention that technical advisory group has an official observer from the International Accounting Standards Board, IASB. They're the ones who issue the IFRSs. This isn't happening without their knowledge and blessing. They absolutely know about it. They acknowledge themselves that IFRS aren't intended to meet the needs of non-profit or the different specific needs of non-profit organizations. As does IPSASB, the International Public Sector Accounting Standards Board, has also acknowledged that IPSAS are not intended to meet the needs of non-profits. So both of those international bodies are very aware of this project and are engaged and involved. The practitioner advisory group now, moving away from the technical, which is standard setters, the practitioner advisory group, we're now thinking of preparers, NPOs. We're thinking about users like donors, and we're thinking about auditors. There's crucial frontline support. As well as academics. I didn't know before this project that there are people who have professorships in accounting and have really great in-depth, really rich experience across different types of organizations and countries. So we have an academic on there as well. So these advisory groups have given input as we've developed the consultation paper, which we're going to talk about later. Now, all the meetings are open, all the papers are on the website. Details about each of the members are on the website. There's nothing closed room or secret, or this is a really open and transparent project. If any of you have the time or the interest to take a deep dive into those conversations, listen to one of the meetings, please go ahead. Knock yourself out. You're very welcome. So we've looked at why this project is so important. We've clarified what specifically we want to achieve and who the project partners and stakeholders and advisors are. So now let's just get a look at the kind of how and the when by looking at the phases and the timelines of how we're going to go about that. So we're using a three-phase development, three-phase process to develop the guidance, which is equivalent to all other standard setting processes. Phase 1 is what we call the consultation phase. And the key output is a consultation paper, which will be launching on the 28th of January, which is scarily close. And now this consultation paper presents questions for structured input from stakeholders. And we'll talk more about that in the second half of this meeting. There's a second presentation, which is really taking a deeper dive into the content of that paper and how to respond. So the second phase of the project as a whole is where we analyze the feedback from that consultation, and we use that as an evidence base to draft guidance, which is then exposed for comment, and that's called an exposure draft. And that should be mid-2023. And then the third phase takes stock of the feedback from the exposure draft, puts through changes before launching the final guidance, which is expected in 2025. Now, developing the guidance itself is really only the beginning, because the benefits that we talked about earlier will only really be felt after it's widely adopted and used. It won't deliver any benefits if it sits on a shelf or on a website. It needs to be out there in real life, in countries, by NPOs and donors being adopted and used. And so that's why there are two key aspects to the IFR for NPO project design, if you like. One aspect is the technical rigor applied in the guidance process. That's led by CIPFA. They are accounting standard experts. It's not going to be full of mistakes and errors and loose language that's hard to interpret. It needs to be technically rigorous in the way it's done. Then this other aspect is stakeholder engagement, which Humentum is leading, actively reaching out to stakeholders all over the world. So regulators, national professional accountancy organizations, donors and NPOs, so that they can participate in the development process. This means that by the time it's produced, hopefully we already have large numbers of people and countries ready and willing to adopt it and start this process of bringing it to life so that it can deliver all its benefits. So let's see how we're doing in terms of engagement. You can see we've already engaged a lot of people all over the world. So countries on this diagram that are in blue are those where individuals have signed up and registered their interest in the project. So obviously Zimbabwe is there in blue. And these include a really broad range of stakeholders, including both international and local nonprofits, their auditors, accountancy bodies, regulators, donors, and others. So when people sign up for a letter or to join the forum, which I'll tell you about later, they have to say what kind of a stakeholder they are. And we track that, doing a sort of pie chart to check that we aren't skewed massively in one direction or the other, that we've got a nice range and balance of stakeholders that are engaged with us. The yellow flags on the map are the members of the technical advisory group. So you can see they're from all continents. And the reddish maroony flags are members of the practitioner advisory group. Again, a really nice spread and a good smattering from Africa. We have 2 from South Africa and 1 from Uganda. And then the black flags are our country champions, like the wonderful Tafadzwa, who's stepped up, who's spent a lot of time and energy becoming familiar with the project, reading slide decks, editing, attending meetings, checking how many people in Zimbabwe are engaged, what is the strategy, who do we need to reach out to. So the country champions are really crucial in terms of knowing their country context, knowing who are the important stakeholders. Obviously, in many cases, English is not the primary language, so really, really important volunteers who are helping us take this message out there. So with that, that's kind of the end of our little introduction, if you like, of just getting a bit of an overview of the project. So what we're going to do next is break into some small groups in using breakout rooms. Don't worry if you haven't done it before, it should just sort of happen. You don't have to do anything. And we'll have groups of about probably 7 to 10 people. So when you get into that group, please do turn on your microphone and your video so that you can see each other if you've got the bandwidth for it. And if you're on a laptop, if you're on a mobile, you might find this doesn't work so well. but bear with us. So first of all, just find out who's in your group, greet each other. And then can you share with each other, what are your reactions to what you've heard? What are you feeling? Are you thinking, oh my gosh, this is very big and scary? Are you thinking this is so long overdue, we need this? What's your initial reaction? What questions have been popping up in your mind as you've been hearing what I've said? And then have a think about, from your perspective as stakeholders in Zimbabwe, and I know there are actually people from other countries as well here, but focus primarily on Zimbabwe context. What benefits could you see in this context? And then also, what challenges can you see from where you're sitting? It'd be really important for us to understand those early and see what we can do to mitigate them. Before you come back, please select somebody who can be your spokesperson, take a few notes. And what we'll do when we come back, we probably won't hear everything from every single group, but there'll be an opportunity to share a few of your questions or reactions or benefits. So in terms of the benefits, if you were here right at the beginning of the meeting, you saw there was a thought experiment. Imagine a world, what would it be like if everybody agreed on the best way to do financial reporting for NPOs? What would be some of those benefits, those changes that look different from today? And have a think about those. Those are the sorts of things to discuss in the benefits. So I am going to stop sharing and set up some breakout rooms. While I'm doing that, does anybody want to just unmute if you've got a question about the process rather than a specific question, which I'd rather you discussed in your small groups? Does anybody have a question about what we're going to do in the groups, or is that okay?
Samantha?
Right, so, yes, go ahead.
Sorry, can I just come in?
Yes, please do.
Can I just use this opportunity to introduce two distinguished guests who have joined us for this webinar. We have Raymond Chamboko and Faith Ngwenya. Raymond Chamboko is the chair of the Pan-African Federation of Accountants Technical Standards Setters Forum, whilst Faith Ngwenya is the vice chair of the Pan-African Federation of Accountants Technical Standards Setters Forum. So Raymond and Faith, welcome to this meeting and thank you for joining us.
Wonderful. Thank you so much. Thank you for that, Tafadzwa. You're very welcome. Thank you, Raymond. So I'll send you into your groups. You've got about 20 minutes. If you have a problem, you can summon me to come and join your small group. But otherwise, just enjoy your time together and share your thoughts and opinions. So I'll see you in about 20 minutes. Bye. Great. So welcome back, everybody. Sorry for those of you who are yanked out of your meeting and you are still discussing if there are more things to say. In a normal meeting or training room, I'd be having to ask you, please come. But here I can just pull you into the main meeting. I hope you've had some interesting discussions there. We've been joined by about 10 or 12 more people who were in the waiting room before. So they can sort of hear, but that it'll be interesting for them to also hear your discussions and ideas. So if you are a spokesperson for your group, please would you raise your hand if you'd like to share a couple of the questions or reactions that your group had. So we're going to focus first on reactions and questions. Is there anybody who'd like to share a couple of reactions and questions from their group? Raise your hand, go to participants and use the hand raise function, and then I'll be able to, gift, thank you. I've pressed ask to unmute, so hopefully you can unmute yourself, even start your video and share with us. Oh, Gift put her hand down. I think she was experimenting. Macmillan,
No,
would you like to?
It's okay.
Oh, Gift, yes, you're welcome, Gift.
Thank you. Thank you. So from our discussions, we actually agree that obviously this is a great initiative that will simplify the reporting for the preparers, for the users, and obviously for the regulators. Secondly, we agreed that this initiative will go a long way in promoting transparency. So the standard will help us to promote transparency within the financial statements or financial reports for different NPOs. The other aspect, a very important aspect, you'd notice for many NPOs, it was very difficult to compare the different accounting reports because some were using IPSAS, some were using IFRAS, some were using country-specific standards. But with this standard, it will help comparability for different NGOs or IPOs, so which is a good move in ensuring that there's comparability of financial statements. Then finally, we also agreed that in the long term, obviously the regulators will also be interested, and it will make life easy for them to analyze the financial reports for different IPOs. Thank you so much.
Super, thank you so much, Gift. So we've heard about simplicity, transparency, comparability, and how this would be helpful for regulators. That's super, thank you, Gift. Macmillan, can I ask you to come in and share some thoughts, so comments or questions from your group? You need to unmute yourself if you can. Yes, go ahead.
Can you hear me now?
Yes, perfect.
Okay, so we had an interesting discussion, and we discussed one of the issues that was raised was 2025 may be very far if we would look into what is happening right now, because already we have a lot of confusion. And we raised an issue that as people are auditing these NPOs, challenges are that we don't agree on what should be done and what should be the standard. So 2025 might be very, very far. Probably if the length could be reduced maybe to something for 2023, that would be great. I don't know if that's even possible. And the issue that was raised as the issue of standardization. I don't know how far these standards are going to go as far as standardization goes from country to country. And as you might be aware, we have issues like with regards to IFRS, we have national gaps and all those. So I don't know how that will be in with regards to the NPOs. And then another issue that was raised was when these standards come in, the donor world should participate in helping the people they give money in compliance. So it's in ways like funding the compliance issues. Thank you.
Right. Brilliant. Thank you so much for that input, Macmillan. That's really helpful. So yes, 2025 is too far. As I said, we needed this 10 years ago. They always say that the best time to plant a tree is 10 years ago. The next best time is today. Already, this is a very speeded up version of the process. If you compare like IPSAS, I think they were started in 1997. It took a long time to develop them. And as they always say, if you want to go fast, go solo. But if you want to go far, you've got to go with other people. So yes, if it was just sitting in a room all by themselves, writing the guidance and then sharing it with the world, it could be done very fast. But we wouldn't have that buy-in. We wouldn't have that perspective, that input, that richness of different viewpoints and opinions, which is so important for actually getting people to adopt it towards the end. So this is already a highly speeded up process. the online meetings for the advisory groups has been really helpful, because normally you'd have to convene people physically maybe every 6 months. It really slows the process down. We've been having meetings every month online. Some people in the middle of the night, depending on their time zones, but that's enabled us to move much more quickly than most of the other international standard setting processes that are equivalent. But I feel your pain and I'm glad you want it. So that's a positive sign, but yeah, we need to work, we needed it yesterday. Now, in terms of country to country and national gap, so as I say, it's really quite like IFRS. So some countries have adopted IFRS fully. Others will say, well, yes, IFRS, but we have these national adaptations to it. So we're going to make it national gap, but it's based on IFRS with some modifications. And other countries just do their own thing completely. And that will be true for this guidance as well. There's nothing that we can do as a project that makes it mandatory that all countries must adopt it. What we can do is write it, develop it in such a way that it's applicable, that it's relevant, that it's user-friendly, that it's something that any country could adopt, and then do the work of advocacy, of petitioning, of reaching out, engaging, and encouraging those with the authority to make those decisions to do that. As we've seen with IFRS and IPSAS, the more countries that adopt it, the more other countries adopt it. So I think we said in the video that we hope that 10 countries will adopt it by 2030. I think what we might see is have blocks of countries. So I know, for example, being in East Africa, Uganda, East Africa works very much as a block. If Kenya adopts it, Uganda, Ethiopia, Rwanda, it'll have a kind of domino effect. So we're hoping to work regionally as well, with the hope that, blocks of countries will adopt it together or in similar timeframes, which could really help that process. But it's going to be a challenge. You've absolutely identified that, Macmillan. And then in terms of donor participation, you're absolutely right. We need them to have their say. They need to be engaged in the development of it so that they're bought into it, so that then if they want their grantees to comply with it, they've got some skin in the game for investing in compliance, in training and resources. There's nothing we can do to mandate that again, but we can create the environment where there's an attitude of positivity around this best practice. It's in donors' interests as well. So one of the things we do is Humentum, not just about this project, but generally is kind of advocating to donors. Please support the admin costs, the overhead costs of your grantees. They're essential. And this is in the same vein, a similar message. Please support your grantees in adopting and complying with guidance, which is beneficial to everybody. So I've heard that loud and clear, Macmillan. Thank you so much for those comments, really helpful. I hope I'm saying this right. Tembinkosi, please, do you want to share some thoughts from your group? Reactions, questions, benefits, and challenges, if you like.
Hi. Okay, I'll not open the video. I'm more comfortable with just audio.
No problem.
Okay, I just felt I also needed to put in our group's contribution, though really it's not that different from what the others have said, because we've also looked at the differences that we face with our different funders. For example, if you have multiple funders, some will want cash reporting and others will expect accruals reporting, which is what most of us have been taught at school. We understand the accruals reporting. Now there's this cash reporting. So at the end of the year, when you're trying to consolidate and have your institutional report, you're applying so many different things to your report, such that for the next person to interpret, part of it is accruals, part of it is cash reporting, because you're trying to. So in the end, really, it will be easier. If it's cash reporting, let's do cash reporting for everyone. If it's accruals reporting, let's just do accruals for everyone. So that at least it's standard. Yeah.
Thank you. Do you have another point, or do you have something else to say? Please go ahead. Otherwise.
Yeah, not really, because
okay.
Most of them are more or less like what others have said. But
brilliant. Yeah.
I thought I should break it down and also say something.
Yeah, no, that's a fantastic, and that's such an important addition that you brought in there, Tembinkosi, this accounting basis. And you know, those of us who are professional accountants, we've got our CPA, our ACCA, whatever it is, our fantastic qualification that we've sweated blood to get. And then we go into an NPO and it's a bit like, oh, it's just cash books and what about all this technical accounting rigor that I learned? And sometimes it feels like we have to leave it at the door when we go and work in an NPO. I absolutely feel this challenge, and you're not the first person to mention it. So we've had a lot of debate within the advisory groups about what should the basis of the guidance be. It's crucial that it's one thing, as you say. If it's cash, let it be cash. If it's accrual, let it be accrual. It's the coping with the mixture of the two that's harder than dealing with one or the other, because it's very difficult to have one accounting system that can give you reports on both bases. You can do one or the other. It's very hard to do both. I have come across some very sophisticated systems with some very, very clever accountants and lots of Excel spreadsheets who've managed to do it, but it's really hard. It's really difficult. It's expensive. It's resource intensive. It's a challenge. So we've decided as a core premise in the guidance development process that this will be accrual-based guidance for a number of reasons, which I won't go into now, but I've just literally this morning finished a video script for a video that would explain why we've gone for accrual as the most appropriate basis. And then as Humentum, we've developed a tool, which I'll be sharing shortly, which helps NPOs and funders to think about which things are they doing on cash and which are they doing on accrual and why, and to negotiate with funders if there are differences. So there are some organizations which absolutely have the capacity and the skill to do accrual-based accounting, but they're being forced into cash accounting by donor requirements. When donors are thinking, well, my grantees have low capacity, I'll make life easy for them, we'll make them do cash. And sometimes we get this differences, and they're all well-meaning. Nobody's trying to be horrible or difficult. There's a lot of goodwill in this conversation. But this tool that I'll be sharing helps NPOs and funders to understand exactly which types of transactions need to be on an accrual or a cash basis. For example, a number of donors would be quite happy with a payroll journal where I can allocate my full payroll costs to different projects, even if it means setting up a liability for my taxes, which are going to be paid next month. And are quite happy for that to be on an accrual basis, even if assets are on a cash basis. Well, you know, so the tool will help you identify which specific transactions need to be on a cash or accrual basis and make that conversation a little bit richer rather than just a kind of cash accruals argument, get a bit more nuance and usefulness to that conversation. So there'll be some materials when we launch on the 28th of January, some materials that will help you with that, Thembinkosi. Such an important question. And we're running out of time, but Faith, would you like to come in and share? Don't say something that's already been said. If there's a new perspective to add, please do. And others of you, please do type your questions, comments, reactions in the chat, because we'll capture those and we'll be able to respond to them and hear them through the chat. So Faith, let's hear from you, please.
Thanks. It's Faith Ngwenya, as I was introduced earlier. I'm with SIPA, the Professional Institute in South Africa, and also a member of PAFA. We in our group 3, we actually agreed that it is critical that we have the standardized standards that are going to be used for the nonprofit sector. And I think what is really critical for us is that, as Shannon actually rightfully put it, that we have got the sustainable development goals that needs to be met. And it's very difficult to really measure what is coming from the NPO sector because of the varying degrees of reporting. And I'm glad that even in these initial stages where I'm assuming that you are going to be consulting with most of either the countries or the blocks, so that we are able to contribute to what will actually come out as the standards. It is quite critical that if we are using the accruals based, that is the format that actually is used. And it is, even with the international financial reporting standards, you will have those areas where you have to kind of go with a dual method, and that is fine. But as long as we are going to get uniformly reported financial reports, which is currently not the case, it's very difficult, especially if you are tasked with looking at various NPOs or NGOs and you have to assess them, because this one comes with their own and you don't even know how they arrive to the figure of their income because of the different ways of accounting and presenting the information. So it is welcome. We actually welcome it, even from a South African perspective, because even in South Africa, we do not have uniform way of reporting for the NPO sector. Thanks.
Thank you so much, Faith, for that input. That's really, really encouraging to hear. And as you mentioned, income is one of those crucial things, isn't it? It's sort of one of our proxies for size, and yet some recognize it on cash, some will accrue income that they haven't got yet, but it's receivable. Some will defer it until it's spent. I mean, we have such a wide diversity of accounting treatment on income. It makes it really impossible to measure anything sector-wide or do comparisons. So thank you very much for that, Faith, and for your word of encouragement. Finally, let's bring in Chidza. Would you like to come in, just briefly share your comment or thought? Thank you.
Thank you very much. So to also avoid repeating what other people have said, we also looked at our own policy inconsistencies as a country, stating that I'm sure these guidelines will also assist us in Zimbabwe. We're looking specifically at our currency issues, you know, exchange rate, exchange losses and gains. How do we then account for them when our policies also sometimes are always that inconsistent, especially as a country? And then in terms of the benefits, we also had someone in our group coming from the donor community, and we're talking about in an instance where there's co-financing. So there's also reduction of risk, especially on the issue that you mentioned earlier on double financing fraud, and also just having the benchmarks for the auditors. How are we reporting? How are we expensing our assets? And also the donor requirements as well. You've got maybe 6-7 donors, they're reporting, they want their reports at different times of the year. And then you basically, if you always working on reports, so your report generation is really happening throughout the year because of the project reports. But then in terms of these guidelines, in terms of, you know, annual reporting, I think we talked about the whole comparison.
Brilliant. Chidza, I'm going to cut you off there. I think your internet's a little bit mixy, but that's fantastic. Thank you for what you've shared there. This issue of multiple donors, different reporting requirements from different donors, expensing assets. Your donors need to see that as a cost, and yet you need to capitalize them. How you can't really do one thing through the year and just have a year-end process, because all this, you need reports at different times. You need to produce accounts at any one given month end for a different donor. And co-financing, double funding, all these things, that's really, really key. I'm going to come back to your exchange loss in a minute. I'm going to move us on, if that's okay, into the next section. If you thought of something else or some challenges or issues that you discussed, please do share them in the chat. It's really, really helpful for us to have those. What I'm hearing though en masse is a general level of enthusiasm and excitement for this guidance, recognizing some of the current difficulties that you've all expressed and some of the benefits that we can see. So let me share my screen. I hope this will bring up the right thing. Yes, so this is the second part of the presentation, if you like, where I want us to take a deeper dive into this consultation process. As Faith said, we are absolutely looking for people to get involved and share their opinions. So we're going to look at who should participate and why. What does this consultation process look like? What's in this consultation paper, which is the sort of document that drives it, and how practically should we respond? So in terms of who, really everybody here and all stakeholders are invited. The main ones that we have top of mind are regulators with the authority to decide whether or not to, for this guidance to be applicable in their jurisdictions. auditors of NPO entity level financial statements, funders, but be sort of the finance and contracts people within donor agencies, those who award grants and set reporting guidance for grantees. And then obviously NPOs as preparers, senior finance staff, most likely. In terms of why, well, without your input, we won't get the cultural context from Zimbabwe. It might not be reflected some of the issues and needs that you have. So it's a real opportunity here to shape the future in a way that meets your needs. And quite often in these international processes, I've lived in Africa for 20 years, some sort of feeling that sometimes our voices aren't really heard and things are done for other people. This is a real opportunity to make sure our voice as Zimbabweans in Africa is heard as part of this conversation, part of this exercise. And I know PAFA are really keen to make sure that stakeholders here are engaged. And then finally, the more responses we have, it builds credibility for the guidance itself. So if we have 1,000 people from 150 countries inputting to this process, it gives us a really strong evidence base for drafting. It brings credibility to the project, and it will help us raise funds to continue and get all the way through. So really, really important that you engage. So the consultation process is shaped by this document called the consultation paper. It's around 200 pages, so it's quite long. So it's really important to kind of understand how it's structured so you can get a handle on it. So after the executive summary, there's an introduction which sets out the objectives of the project, explains who should respond and how. And so that's really short, essential reading, if you like. Now, the bulk of the paper and all the questions that we're looking for your feedback on are in these two main sections, part 1 and part 2. And we'll look at those in a bit more depth shortly. Part 1 is kind of landscape level issues, and part 2 is taking a deeper dive into specific accounting and reporting issues. And then there's supplementary information provided that gives more context, and then a glossary. And that's really important because sometimes the same terms are used to mean different things in different countries, or different terms are used to mean the same thing. So this glossary is just making sure that when we've used a term, this is the meaning that we've given it. It's not defining now what this term means in all countries. It doesn't change the meaning in any jurisdiction. It's just so that we can have a common understanding and make sure we're talking about the same thing. So let's take a deeper dive into these two sections. So part 1 of the consultation paper, as I say, is about these framework level issues, if you like how to describe non-profit organizations. Who are the stakeholders? It's written in plain English, and it's pitched, if you like, to be accessible to a broad audience of stakeholders interested in financial reporting, not just highly trained technical accountants. It's got a much more broad feel to it. In part 1, each chapter presents a proposal and ends with a request for general matters for comment, or GMCs. In other words, you're invited to comment on the general level matters presented in the chapter. Now, these questions tend to take this form. Do you agree with our proposal? If not, why not? So in this sense, it's an open question. If not, why not? That's an open text box, but it's also very structured. You're responding to something that you have to have read. You need to read the chapter in order to share your opinion and comment on it, really. Now, part 2 is all about specific accounting issues, like when to recognize grant income, as Faith mentioned, whether to disclose gifts in kind, or how to measure inventory that doesn't have a sale value. These sorts of niggly issues that NPOs have said current guidance doesn't really help give us the guidance that we need. Now, it's also written in plain English, but it's pitched to be accessible to a more technical audience, familiar with accounting concepts and language. So we don't have to explain the use of the word accrual, for example. We're kind of at this audience, we're hoping that those basic accounting kinds of concepts would be understood. Now, in this section, in this part, I should say, in part 2, each section describes the issue first and explains what it's about, and then presents alternative treatments that are possible. And we don't say which one we prefer. We don't really have a preferred option. It's just that these are the kinds of options that exist in different jurisdictions. And it's got a big technical, in the glossary actually also includes all these appendices of what each country does and the treatments of these different things. This is very highly researched, all the different options. And then you're invited to choose. So generally these questions, these ones are called specific matters for comment because it's part 2 on specific accounting issues. And it's basically, do you agree with the way we've described this issue? And have we put forward the right alternatives? Is there any other alternative we haven't thought of? And then which alternative would you prefer and why? So again, it's necessary to have read the section and the alternatives before you can meaningfully submit a response. This means we get really structured responses that we can analyze, and that can give us data-driven ways to move forward with the development. So in part 1, these general matters for comment, I want to give you a little flavor for what's in there. As I say, all this content has been reviewed and guided by this practitioner and the technical advisory groups. So chapter 1 is all about what do we mean by NPOs? How do we know if an NPO is an NPO? What is it that makes an NPO an NPO for the purposes of this guidance? We propose some broad characteristics. It's very hard to say, well, it would be a charity or because every country has got a different way that it organizes their different types of NPOs. So we've come up with some broad characteristics that describe the types of organizations that would be NPOs, and this guidance would be relevant for them. So the question is, do you agree with these characteristics we've proposed? If not, why not? What else would you propose? Chapter 2 is all about this is part 1. Part 1, chapter 2 is all about the external stakeholders, users of NPO financial reports, and what are their information needs. It presents a proposal and asks, do you agree that their information needs are A, B, C, D? I think here we've got information about achievement of objectives, economy and efficiency, compliance with restrictions and regulations, and longer term financial health. So the chapter spells out why we think these are the 4 important things, but here's your chance to share your opinion. Is this right? If not, why not? What should we be instead? Chapter 3 of part 1 is all about aspects of guidance itself. For example, we make this core premise that it should be accrual based, and we present our case for why we think it should be. And the other core premise in here is that we should include narrative reporting that accompanies the financial statements, should be a part of this guidance. And you're invited to share. What do you think? What challenges might this present? And you've got a chance to share your thoughts there about those aspects of the guidance. So chapter 4 is all about existing financial reporting frameworks. So firstly, it makes the case that this IFR for NPO guidance must draw on existing frameworks. We can't realistically start with a blank sheet of paper and write from scratch, because we need to have that credibility and consistency across the accountancy profession, even if it's within different sectors. Even IPSAS are based on IFRS and adapted to the context. So, but which of the frameworks should we start with? Should we start with IFRS, with IPSAS, or with IFRS for SME? None of them are perfect, but which would be the best one out of the 3? So what we've done, we've set out some criteria for evaluating the usefulness of those existing frameworks for this project, and then we assess them against those criteria. And then there are 3 questions, but one of them is, do you agree with the criteria that we've used to assess these frameworks? Have we looked at this in the right way? So then chapter 5, which is the last chapter, it's kind of where this is all driving towards. We put forward basically a model, a proposal for how we would go about drafting this guidance. And the model that we propose is to have IFRS for SME as a foundational framework for a number of different reasons. It's small, it's got a lot of the more complex subjective aspects of full of IFRS are left out. It's not updated nearly as frequently as full of IFRS, so it would be easier to remain consistent. It has issues as well, and there's some things in IPSAS that are more relevant to the non-profit sector. But we've set out all the reasons for why we've gone for IFRS for SME as a foundational starting point. And then you're invited to share your thoughts. So that's a little snapshot. Oh, what have I done? Sorry. That's a snapshot of part 1. We've got 5 chapters, NPOs, stakeholders, the guidance frameworks, and our proposal for development process. Section 2, I'm just having my eye on the time. Chapter 2, I should call it part 2, sorry, part 2 of the consultation paper is around these specific accounting issues. And there's a whole sort of section for each of these issues. And just to give you a sense of it, it's things like, how should the financial statements be presented, including things like fund accounting? What should be in the narrative report? How are we going to classify expenses? What's the neatest and best way to have some top level expenditure headings? How should we recognize income, as Faith mentioned? What about fundraising costs? Do they need to be separate? Are they part of program activity costs? Are they part of overheads? Do we even want to have that distinction? What about recognizing when we make grants? When is a grant a grant? Is it when it's paid? Is it when we've made an obligation? Is it when they've accounted for it? What about assets that don't generate revenue? All of IFRS is about assets only have a value on the balance sheet because they will generate profit or revenue in future years. Well, our assets are for social purposes. What income does an ambulance generate? It doesn't. So how do we go about thinking about those social purpose assets? Same for inventory, like if you've got medical supplies or things that you're using or distributing, or even inventory of donated items that are being sold. Again, that's not really covered in the existing standards. And then crucially, a couple of issues around when we've got branches and head offices, and we talked about joint initiatives, co-financing. How do we define what is the reporting entity? How do we know if we're just acting on behalf of somebody else as an agent rather than making our own decisions about what to spend money on? Things like that. So those are that, just to give you a flavor of the types of issues that are addressed in part 2. I should also mention that before it gets into each of these issues, the first chapter or the first section of part 2 is saying how we came up with this list of issues in the first place. And there's a question about what is not on this list that should be. And one of the things we considered putting on was exchange losses and gains, as was mentioned earlier. So there's a question, are there issues that aren't on this list but should be? Well, that's your place to say exchange gains and losses are really crucial, and a sector-specific issue that doesn't have guidance elsewhere, we need guidance on that. That's your moment to make that case. Okay, so we've taken a look at the structure and the content of the consultation paper. And before that, we looked at who should participate and why. So hopefully by now, your only question is, okay, I want to do it. You're thinking, I want to share my opinion. I have opinions about this, and I want to get involved. So we're working to make it as easy as possible for relevant stakeholders to share their views. So first of all, hardly any of the questions are compulsory. There's some sort of initial data about who you are, like which kind of stakeholder you are and which country you're in, which is really important for the analysis. But apart from that, if you have an opinion to share about stakeholders in part 1, but you haven't got much to say around frameworks, fine, just answer the section that you've got an opinion on. If you want to talk about income in part 2, but you're not really bothered about inventory, fine, you just focus on the bits that you want to share your opinion on. If you're an accountancy institute and you want to do the full thing and answer every single question, wonderful, please do that. So we've been creating some videos and some content for the website that will show exactly how to respond. And you'll be getting notification of that on the 28th when we launch. But basically there's 3 main ways to do it. One is a letter. If you are an institute and you're used to responding, say, to IFRS or IPSAS consultations, and it's something that you do, the most normal way that that's done is a letter. You can do that. There's also a Word template document, which is great if you want to, collaborate with other people or respond as an organization, get together your answers in a Word document and upload it, fine. And then there's a sort of survey, sort of click through, give your answers, submit an online survey as well. So lots of ways to make it easy. But basically the website is the main place to go, and you can follow your nose there. We're also looking to have some regional roundtable consultation meetings. We're planning 14, I think. And the one for Southern Africa is supposed to be the 30th of March. That will be a 4-hour meeting, so not for the faint-hearted, a 4-hour online meeting where we'll set out about 4 or 5 different issues and have a chance to hear and discussion around those general matters for comment and specific matters for comment. And I know I'll be working with Tafadzwa to find out who will be the right people from Zimbabwe to be involved in that meeting, which will be regional. Okay, so my last slide, my core from my heart, please take this opportunity. Use your voice to shape the future of nonprofit financial reporting. We want to hear from you. We really want you to be part of this development process. Even if you've never done this before, even if you've received emails from IFAC and PAFA, you go, oh yeah, somebody else will do that. Please be the person that has a go at engaging with this process and have the confidence to share your opinion. It matters. Your experience on the ground, your lived experience is relevant to this process. Okay, so I'm going to stop there. Let's open it up for some questions. Who would like, if you'd like to raise your hand again, if you've got a question, or you could put it in the chat. I can see some other things in here. I'm going to have a quick look at the chat. Or Tafadzwa, I don't know if you've been able to look in the chat. Are there specific questions there? It would be good to handle in our final minutes. If not, please just raise your hand and fire away with a question. Tembinkosi, you still have your hand up, but I don't know if that's because you have a question or if it's from before. Ah, you've lowered, okay.
Yeah.
So fire away. Yes, Anwar, welcome. From Bangladesh, you're very welcome. What would you like to ask, Anwar?
Okay, very good morning. First of all, I'd like to thank the Zimbabwe. They invited me to listen this workshop. No, it is not my question. I am just supplementing because I have attended Bangladesh stakeholder workshop, and last 2 hours I have listened to the. I was also one of the group where Ramon was the group member. So the message I want to give the message to the, because I worked for non-profit organization last 30 years. Out of that 1 year, I worked for BDO, one of the accounting firm. So we didn't have much from the accountants or auditors. Especially the auditors is one of the main stakeholders. And also we are the CFOs of non-profit organization. We think that an uniform accounting system, the reporting system, will help us to reduce our time and to concentrate the better financial management of the organization. What has happened to the CFOs, we are actually very busy for various reporting. So reporting to some extent is a straightforward things, but being a CFO or accountant of the non-profit organization, we have a lot of other activities for the better governance of the organization, support the program implementation team, and support the project team. So in that sense, this is a basic need of the accounting community also, that we need a uniform accounting system by which we can reduce our valuable time and we can concentrate our time to the other financial management issue by which we can do the governance in the non-profit sector. Thank you for giving me a chance.
Brilliant. Thank you, Anwar. And it's really encouraging, I think, isn't it? From sitting in Zimbabwe, even in Bangladesh, in so many other countries around the world, we're having the same conversations and addressing these same issues and getting it. Thank you, Anwar. Tafadzwa, did you want to come in?
Okay, I'm just going through some of their comments, not questioned as such, but participants are pointing out to the challenges that are likely to be faced where they are saying organizations in this sector are different in terms of size, scope, and what it is that they do. So that is a challenge that we need to have in mind as we progress with this project.
You're absolutely, well, let me speak to that briefly, because that's absolutely true, isn't it? You might have some tiny community-based organization operates under a mango tree. We have lots of those in Uganda. I don't know if you have those in Zimbabwe. And, you know, it's tiny. And we've got international INGOs that are, you know, multi-million, thousands of staff operating in 50 countries. We've got charitable organizations versus membership and religious organizations that don't really have maybe so much grant funding. It's much more from members. There is so much diversity. And I think that is a huge part of the challenge. And that's probably why it hasn't been done before. What we've done in chapter 5 of part 1 of the consultation paper, set out of this huge array of different sizes and scopes. There's no way we can do one guidance that will meet all needs. And some of the countries that have their own specific country requirements, like New Zealand, for example, they have a tiered system, tier 1, tier 2, tier 3. And according to your size and your nature, you kind of go to the guidance that best fits your needs. In the UK, they have something called the UK Charities SORP, but you only have to comply with it if you're above a certain size. So if you're smaller, then you don't have the burden of having to apply an accrual-based standard when actually you're of a size and scale and scope where cash accounting is actually fine for your needs and you couldn't manage anything else. So what we've set out in that chapter is to say, this guidance is for everybody. If you want to prepare good, high quality financial reports on an accrual basis, this is the guidance to go for. But we're focusing on the needs of the non-tiny. And we're also leaving some of the really specific needs of the very, very large. If you're very, very large, well, we might not cover all your needs in this guidance. If you're very, very, very tiny, it's not just size. I'm approximating here. It's more nuanced. There's to do with where you get your funding from and where your operations are. It's not just size. But if you're at either end of the spectrum, this either might be too onerous and too much of a burden to comply with it, or it might not meet your needs. And we're trying to pitch for the majority in the middle to get something that will speak to the majority of issues and be relevant for a really not majority, because there's so many small ones in terms of size, but certainly meet a good proportion of, say, the income that's managed in the sector. So it's also really important that in the consultation, and if we think about this in terms of PAB, who I think are here, it's not just NGOs that need to be involved in this. We need to be thinking about universities and not-for-profit hospitals, or, you know, there's lots of different types of entities, and it's really important to hear their voices in this as well, so that we reflect some of that diversity in the consultation. So that was a slightly long answer, but you mentioned diversity and it's absolutely key. Thank you, Tavadzo. What's another one? I saw a comment about donors. Is that the other one you wanted to mention?
Yes, this one is from Abraham, Stole, and Eric. The underlying comment there is that there is need for us to include and incorporate large donors, like the USAID, DFID, they've changed name now, amongst others, to be part of this initiative, because they're saying that some of the challenges arise as a result of these donors having different reporting requirements. And consolidating the multiple reporting requirements presents significant challenges.
Absolutely. And this is really at the heart of, I think, you know, how much of a finance person in an NGO, how much of their time is spent on donor reporting versus year-end reporting. And it's probably more like 80% is around producing, and in 1 month end, you might have 7 different reports in 7 formats for 7 donors. And, you know, that donor reporting aspect is related to this project, but it's not the same thing. So not as part of this project per se, but to the side of it, we are certainly advocating for donors to harmonize their own reporting formats. For example, if USAID and ECHO and FCDO and EU and even some of the smaller donors, I don't know, CordAid or somebody that does sub-granting, if they could have one unified way of classifying expenses and the way that this donor report should be produced, gosh, wouldn't it be easier? It would just make life so much simpler. So there is a protocol that's been developed and there's a link to it in the PowerPoint. So when we send the PowerPoint, I think it's on slide, that's one of the my very first slide where I put that the accounting system in the middle with the transactions and the reports. And at the bottom, I said there's another project that has a link to the protocol for the money where it counts reporting format and expenditure classification. That's something that we're advocating with donors, that they could move towards using that system. And if more donors are harmonized in their donor reporting formats, we can then harmonize the annual accounts in a similar, or at least not inconsistent way. At the same time, that some of these donor reporting harmonization projects, there's another one with the Grand Bargain that's related, and they're all speaking to each other. But in some ways, they're waiting a bit for this project. They're waiting to see about the consultation paper for this international, professional, international accounting standards development process, so that they can speak to each other. So it's a bit chicken and egg, but you're absolutely right. The two really need to speak to each other. We have a member from USAID on the practitioner advisory group, glad to say, and they're very positive. They're very well aware of this. It even appeared in the USAID annual report from the CEO, the CEO, the chief person of USAID, in his published annual report for 2020, he mentioned this project on page 52, one tiny little bullet, but I rejoiced when I saw it, that, you know, it's on their radar, which is really exciting. So yeah, we absolutely hear you, and that's such an important point, that we're working very hard. If you have donors who you engage with, please tell them about this project, send them my way, point them to the website, and make sure they are aware of it so that they can engage as well, please. And donors, like NGOs, operate at many levels. So you'll have your country office rep and maybe somebody in another country as well. There's not always fantastic communication within those huge organizations. So we might be focusing on the head office contact that we have, but the country level person who actually reads reports from country level grantees isn't engaged. That's where you can bring them on board, and we can get engagement at all those different levels. Would be so important. Super. I'm watching the time and it's running out so fast. If you've got other questions or comments, please add them to the chat. Meanwhile, I've got a final couple of slides just to take us home, so that you can see how to stay involved. So one is the online community forum, the IFR for NPO forum. This is a kind of LinkedIn stroke Facebook specifically for people interested in this topic, if you like. It's got groups which you can join. There's conversations and threads that you can respond to. You can share documents. We post questions in there and ask you to share your opinions. We post information, and a really great way to meet people in other countries and all over the place. So that's the forum. If you go to the website, it's up there in the top right hand column, and we'll send the links are also in the PowerPoint, which we'll send you, but it's the www.ifrfornpo.org. It's the only thing it could be, really. That's right, and then the forum is up there. So please do join that and participate in that forum. Then other ways to get involved, subscribe to the newsletter. This won't fill your inbox with spam, but it's just make sure that you don't miss out and you get updates. You'll be informed when the consultation paper is issued. You'll be reminded when the deadline's coming so you don't forget, and things like that. Then do visit the website, and also on social. So there's LinkedIn and Twitter. Follow us there, share our posts, and get involved in making sure what broad number of people are aware. So that's it from me. Let me Thank you, Tafadzwa. Thank you, everybody who's been here. I really appreciate the engagement, the wisdom, the experience, the perspectives. And I'll hand back to Tafadzwa. Thank you.
Thank you, Samantha, and thank you everyone for participating. Thank you to the people who presented, representing their groups, Chiedza, Faith, Macmillan, Gift, and thank you very much as well for the contributions in the chat box. Please keep them coming, and as Samantha highlighted, if you have questions, please do type them in the chat box. Now, having full sight of the big picture, which this initiative is aiming to bind us all, I believe that together I have confidence actually that we will achieve this preferred way of designing financial reporting guidelines for our sector. It is also my hope that this meeting has made it very clear that a big part of this drive is to improve the way the NPO sector operates from a financial reporting orchestration perspective, and a universally aligned one. Through these universally accepted or applicable guidelines, we will attain inclusion and inclusion of all professionals working within the sector, and certainly the interoperability of finance professionals in the nonprofit world. So please do get in touch, as Samantha highlighted. Would appreciate very much if you participate actively. And let's speak as Zimbabweans. Get in touch with me or get in touch with Admire. He has put in his details on the chat box. Also feel free to reach out directly to Samantha, but let's speak with one voice, make our voice heard, and get this project up and running. Thank you very much, Samantha, and thank you everyone for joining us.
Thank you.
Thank you. Bye-bye. Good day.
Thank you.
Bye.
Bye.
Thank you.
Thank you and goodbye.
Yes.
Thank you.
Thank
Thank you and goodbye.
Thank you. Sam.
Thank you.
Sam, I'm saying today.